Briefing memo: U.S. Argentina China economic dynamics. Overview: Argentina has deepened its economic ties with China over the past decade, making Beijing a key trading partner, investor, and financial supporter. China has financed major infrastructure projects and extended currency swap lines that helped Argentina weather previous financial crises. The United States recently stepped in with substantial financial support aimed at stabilizing Argentina's economy and limiting Beijing's growing influence. The US dollar swap and related assistance are designed to give Argentina credible alternatives to Chinese financing, infrastructure investment, and SMEFCHEF, and access to strategic resources. Why this matters beyond money. If Argentina becomes overly dependent on China, Beijing could gain control or influence over critical assets such as ports, mineral resources, data centers, and infrastructure relevant to regional security. Large-scale Chinese investment can create enduring economic and political dependencies, aligning Argentina more closely with Beijing's strategic interests. U.S. officials view a deeper China-Argentina partnership as a potential erosion of American influence in South America and a risk to hemispheric stability. What the United States is doing and why. The U.S. has provided significant financial assistance to stabilize Argentina's currency and markets, reducing Buenos Aires' reliance on Chinese credit and swap lines. Washington is encouraging Argentina to prioritize engagement with U.S. firms in key sectors, particularly energy, mining, and infrastructure, while discouraging foreign rivals from gaining control of strategic assets. These efforts aim to protect critical supply chains, maintain a balanced regional power structure, and prevent adversarial leverage in Argentina's economy. Strategic takeaway: the Monroe Doctrine lens. The U.S. response aligns with a Monroe Doctrine-style objective to prevent non-Western powers from gaining undue influence in the Americas. The optimal approach is to offer Argentina a viable, mutually beneficial alternative to China, tied to clear safeguards for U.S. interests and phased cooperation that supports Argentina's stability. A successful policy balances defense of regional influence with respectful partnership, avoiding actions that could alienate or humiliate Buenos Aires. Bottom line: China already holds significant economic influence in Argentina. The U.S. intervention seeks to prevent that influence from evolving into strategic control. Long-term success will depend on whether Washington can provide credible, sustainable alternatives that protect U.S. interests without cornering Argentina into renewed dependence on Beijing.